The US dollar is rising against the Canadian dollar once again. The pair remains range bound, but we are starting to see it edge higher back towards the upper end of its range. Now, one of the things which is potentially contributing to this upward moves that we are seeing in the last couple of days, although broadly speaking over the last couple of weeks it has broadly stabilised. But one of the things that's maybe given this a little bit of a boost in the last couple of days is the fact that we are seeing oil prices run into a bit of a peak. Now, this comes despite the fact that trade optimism is peaking, the fact that we are seemingly close to a phase 1 trade agreement. This is the greatest threat to the global economy, and there has been a correlation between moves towards a trade agreement and oil prices, and of course the inverse as well over the course of the last year. And we're also seeing market sentiment buoyed off the back of this, and both of these things have previously been bullish factors for oil prices, but it seems that oil prices have been peaking despite the fact that we've had these positive headlines, potentially a sign that oil is a little bit overextended at this moment in time, having rallied more than 10% over the course of the last month and a half. But with oil prices stabilising, then this is potentially pulling into the bearishness that or the softness that we are seeing in the Canadian dollar. There is, of course, a strong correlation between oil price movements and the Canadian dollar, so the fact that we're failing to see oil rally is potentially holding the Canadian dollar back, keeping the US dollar at the upper end of this range. In terms of where the key levels are, as you can see on the charts, we're at the upper end of a range between 130 and 134. We're above 133 at this moment in time. There's still a little bit of a way to go before we start to hit those 134 levels, but if that breaks, then that could potentially either signal a bearish factor for the Canadian dollar, or even suggest that trade talks are starting to turn a little bit more sour. Now, like I say, if we see a rotation off that 134 level, that would suggest that this long-term range that this pair has been trading in now for a number of months is going to continue. Looking at the broader trend really within this dollar CAD pair, though, this was a pair that was starting to turn a little bit more bullish a couple of months ago. We had the longer term trend over the course of the majority of this year with the US dollar. Now, as you can see with the US dollar against many pairs, that started to plateau, and since then we have seen it look a little bit soft, and the Canadian dollar was one of the currencies that started to really take advantage of this, where we saw a breakout that rising trend, which is something we haven't seen in some other currency pairs, but we saw the Canadian dollar break out of that trend, potentially setting up a bearish move. And while we did see a move back, like say towards that kind of 130 level, we've really struggled to break below that ever since, and it seems that we have just been in this range territory. A break above 134 would be a strong technical signal, though, and one that would potentially go against the prevailing trend in terms of where people perceive this to be going. The problem that we always have, though, is that every time someone calls an end to the dollar top, it seems to find a way to make another move higher. Ultimately, a lot of this does depend on the trade talks, though. If these trade talks do turn sour, that has historically been positive for the greenback, with it being the world's reserve currency, with US Treasury still yielding more than other currencies around the world, and with the US being the trade deficit side of the trade balance between the US and China. But then it's also it has been previously bearish for oil, which again is typically bearish for the Canadian dollar. So a break above 134 may potentially signify a lack of confidence that we are moving towards a trade agreement, or potentially a collapse in talks. And while that may seem extraordinary at this moment in time, it wouldn't be the first time we've seen a collapse in talks, just as they seem to be moving well. Earlier this year, we saw a similar effort. There was a week of talks between the US and China. It seemed to all be going very well. And then come Friday evening, Donald Trump announced new tariffs against China, and that brought an end to those talks for a number of months. And all of a sudden, trade optimism turned into trade pessimism, and that again weighed on oil and supported the US dollar.